Welcome to the Nichols Tax Update Podcast, issue 21-45. Here's our standard disclaimer. You can read that. You don't need me to read it to you, but I do want to emphasize the third paragraph. I acknowledge the value in preparation of this program of my subscription to Tax Notes Today. Tax Notes Today is published by tax analysts. In my opinion, they are the preeminent source of reliable information for tax professionals coming out of all of the confusion that is generated in Washington, D.C. I've used them for over 30 years, and I can highly recommend them. What's in this week's edition? 5 items, starting with what is a controlled group? And of course, why do you ask? Words can make a difference. What does the document say? So often, the first response to a question about a tax situation is, what does the document say? Then, how do we calculate a foreign tax credit limitation? The IRS is offering training for that, for their own auditors. We have the 4th practice unit in a series published in 2021 on the credit. Next, you can subscribe to an app. I didn't know that will allow your call to any one of several IRS helplines to go to the front of the line based on your subscription. And we'll talk a little bit about what it is and how it works. And finally, qualified plan limits are adjusted for inflation in 2022. And we've got 4 slides just to give you that basic information this week. Let's start with what's a controlled group. Certainly, a trio playing music must be a controlled group. But there are more than one use of that term in different contexts in the Internal Revenue Code. The one we're concerned about this week that can have a surprising negative effect is 414M. Under Section 414M, all employees of the members of an affiliated service organization are treated as employed by a single employer for purposes of employee benefit requirements. That 414M is in the employee benefit plan rules. But we need definitions of the concepts in 414M. What is an affiliated service organization? And oh, by the way, what are management functions? And that's important because that section, which is, as I said, in the qualified plan rules, is being incorporated in the IRS position statements on other affiliation issues as the tax law continues to be developed and modified and changed and made better or made worse by successive iterations of the United States Congress. They without having any historical knowledge of the Internal Revenue Code, no history in the people that are writing the code don't have that history. They incorporate the first section they find that talks about affiliated group, and it may not be exactly appropriate to their purpose. No guidance has been published on that code section since 1983. That's before the Tax Reform Act of 1986 and before many of you were in the practice of public accounting. Services historically performed by employees certainly may have changed a lot. Our next case, Mary P. Nelson, a decision of the 5th Circuit. The 5th Circuit says the tax court properly determined that partnership interests Mary Pat gave to her daughters were percentage interests rather than fixed dollar amounts, based on the clear and unambiguous language in the transfer documents. She tried to build some flexibility into how the percentage gifted was determined as a function of stated dollar amounts. But she, her advisors, her accountants, her lawyers got it backwards. Here's what the document said. Mary Pat desires to make a gift and to assign to the trust her right, title, and interest in a limited partnership interest having a fair market value of $2,096,000 as determined by qualified appraiser within 90 days of the effective date. So the percentage interest in the limited partnership was going to be determined by the appraiser's value applied to, so the appraiser determines the value, then applies the $2,096,000 to determine the number of units. So the percentage interest was a function of the value determined by the appraiser. That's it. It's fixed in stone. When the IRS audited the return and determined a higher valuation, that did not change the percentage interest based on the appraisal. It just increased its value by 30%. Instead of making a $2,096,000 gift, which she intended to make, it was closer to $3 million. And as a result, she owed an additional $940,000 in gift tax, penalties, and interest. The words are important. You need to think these things through. Next, how do we calculate a foreign tax credit limit? The IRS tells us how. In this practice unit, this is the fourth in a series published this year to train IRS agents in applying the foreign tax credit rules. Now, each one works on a different topic, topic within the determination of the foreign tax credit. Why? Well, it's not a difficult question, really. More taxpayers have foreign income and international business arrangements, and IRS auditors must know how to determine the correct amount of any credit claimed against the taxpayer's U.S. tax liability. Tax laws and tax rates are as different as social customs and skin color. But we want to cut the tax dollars. We don't want to pay a nickel more. There we are. We don't want to pay a nickel more than we have to pay. So we want to get credit for the tax we paid in Saudi Arabia, the tax we paid in South Africa, the tax we paid in Congo, the tax we paid in Taiwan. I want to cut my tax bill. And so I'm going to educate myself the same way the IRS is educating its auditors, by reference to these practice units. And you find them on the IRS website. Search for practice units, all caps, plural. Practice units, plural. That'll get you to the drop-down list. NQ Inc. uses technology to cut the IRS call hold time, which has been frustrating to all of us. In South Carolina, I've monitored discussions on our chat room where people are commiserating about waiting for 45 minutes or 2 hours on hold and then being cut off. So it had to happen. Some smart individual has created an app that uses the same technology that answers your call to an ad on the third ring, then assigns that call to any one maybe of 100 employees who are available to take the call. This technology is being used to cut in ahead of earlier callers who are on hold. NQ grabs and holds a spot in an on-hold queue. So NQ is calling that IRS helpline on a regular basis and being assigned a spot. They continue to get assignments of spots, one after another, and when you are a subscriber to the NQ app, they will assign you one of the spots that has been assigned to them in the hold queue. Read all about it, and maybe even subscribe at the link that's at the bottom of this slide. And of course, you're all downloading the material, right? Right. 2022 qualified plan limits and phase outs. This is one of 4. IRS announced the cost of living adjustments, income ranges for determining eligibility to make deductible contributions to IRAs. And here are the limits. I'm not going to read them all. We just want to touch on the high points. Individual limits for the 401k, $20,500. That's up from last year, up from $19,500. And for individuals over age 50, it's $6,500 for a possible total of $27,000 to a 401k, to a 403b, a 457, and to the federal thrift savings plan. The limit for simple retirement accounts is $14,000 with an additional amount for individuals over 50 of $3,000, and the annual limit for IRA contributions is $6,000 with a catch-up of $1,000 allowed. For single taxpayers covered by a workplace retirement plan, the phase-out range is increased to between 68,000 and 78,000, up from 66 and 76. But that increase in phase-out ranges continues for married couples filing jointly between 109 and 129, $20,000, up from 105, 125. For an IRA contributor who's not covered by a workplace retirement plan but is married to someone who is, the phase-out range is higher. It's 204 to 214. For a married individual filing a separate return covered by a workplace retirement plan, there is no annual full cost of living adjustment. That remains at between $0 and $10,000. Finally, the income phase-out range for taxpayers making contributions to a Roth IRA is increased to the area between 129 and 144 for singles. That's up from 125 to 140. Married couples filing jointly, it's the $10,000 between 204 and 214. The income limit for the Savers Credit, also known as the Retirement Savings Contribution Credit for low and moderate income workers, phases out between above 68,000. That's up from 66,000. Well, that's it for this week. But by the way, if you have questions and you want to ask the question privately, please feel free to send your question to that address. I will be more than happy to answer your question privately. Now, that will be archived for purposes of, for control purposes, because the SCAPA can't have a bunch of advice floating around out there. But I will answer your question privately and see that the question and the answer are properly archived. That's it for this week. Until next time, please stay safe. We need each other, as far as I know.